What up, Hyperchange? Welcome to another episode. Today we're going to be talking about Amazon's Q3 2017 financial results. The company reported its earnings after the bell on Thursday, and it sent the stock soaring to all-time highs at $1,100 per share, even a little bit higher. Amazon has been on a monster run. Shares are up 45% year to date. The company at $1,100 per share is trading for a market capitalization of $550 billion. That's right, more than $500 billion of market value for Amazon shares today. So let's dive into these numbers and see really what happened. Revenue was really strong in the quarter, coming in at $43.7 billion. This was up 34%. Even if we adjust without the Whole Foods acquisition one-time bump, the core Amazon business was still growing at 29%. Everybody's talking about the stock going to new all-time highs because they beat Wall Street's analyst consensus, yada, yada, yada. I don't think the stock moving has anything to do with the earnings consensus. It has all to do with the health of the business. If you'll check this out, Amazon's quarterly growth rate has been accelerating its growth. Even without Whole Foods, they grew revenue 29% in the quarter. That was up from 25% in Q2 and 23% in Q1. So Amazon's core business is on fire here. Year to date, revenue is $117 billion. This represents growth of over 27% through the first 3 quarters of this year. AWS posted a monster quarter, over $4.6 billion in revenue and almost $1.2 billion in operating earnings just in the quarter for AWS. If you'll check this out, I've annualized my projections of what I think the AWS business can do, and it looks incredible. It looks like AWS is going to do $17.5 billion in sales this year, over $4 billion in operating earnings. As we said before, as a standalone company, this is potentially worth between 100 to 150 billion and is by far the most profitable part of Amazon's business. Operating margins for AWS in the quarter were over 25%. That's the highest they've been in 3 quarters, so that was a great sign. I mean, taking a step back, if we look at Amazon as a whole here, they have just the growth they put up is astronomical. This year, they're on pace to hit revenue of $177 billion. That's right, $177 billion. Check out how beautiful this chart is for yourself. If we extrapolate this to next year, Amazon's projected to do $228 billion. Remember, they're getting the bump for having Whole Foods for the full year in 2018. This is going to accelerate revenue growth. In the meantime, while their AWS business, their core retail business, continue to grow, they're going to be crossing the $200 billion revenue milestone next year. So be on the lookout for that. Turning to some final tidbits from the conference call, one of the biggest reasons that the core business is doing so well is because they had a knockout Amazon Prime Day in July of this year. It did even better internationally. This is Amazon's holiday where they just put a bunch of deals on their website and made it up and are getting people to buy online. It seems to be a huge hit. It's driving new Prime subscription. It's driving traction on their e-commerce platform. The success of Prime is really what's driving Amazon's core retail business to continue to grow. In their other revenue category is Amazon's advertising revenue, which a lot of people have been talking about recently as it's becoming a bigger and bigger piece of the business. And they did put out an interesting tidbit on the conference call, which is that advertising revenue is growing faster than their other revenue category, which was already up 58% in the quarter. So although we don't know what Amazon's advertising revenue is, it was probably in the several hundred millions of dollars this quarter, and it's up over 58% year over year. So incredible growth for Amazon's advertising business, and look to see that continue. They may even have to break this out as a separate revenue line eventually as it gets bigger and bigger. AWS, based on the numbers they put up this quarter, is at an over $18 billion run rate. That's right, $18 billion run rate. Not much else to say there other than this is by far the biggest enterprise cloud computing business on the market right now, and their dominance is clear. They're still growing at 42%. This revenue run rate is going to cross 20 billion real soon, 25 billion right after that. There's just no telling when AWS growth is going to slow down or stop at all. Lastly, on Whole Foods, Amazon was very quiet about what they plan to do with the company. They wouldn't comment on whether they were going to accelerate the store rollout of Whole Foods or anything like that. There was also a couple questions asked about would they be setting up a pharmacy in Whole Foods, because there's been a lot of speculation that Amazon will start competing with drugstores like CVS and Walgreens. Amazon's management is just so politically correct on these conference calls. They won't give you a drop. But according to what I'm hearing on the call, analysts are really speculating that they're going to enter the pharmacy business via the Whole Foods acquisition. So I'd be on the lookout for that. They also wouldn't comment on how fast they're growing the physical footprint of Whole Foods locations. But my guess is we're going to get an announcement in the near future that says that Amazon's planning on accelerating the growth of Whole Foods due to the recent success after they've acquired the company. Additionally, they're building more and more bookstores. Before I let you guys go, let's take a quick look at the valuation. With about 1,100 a share and about 500 million shares, as I've said, the market cap is now $550 billion. Based on my projection of $177 billion in sales this year, they're trading at about a 3.1 times price sales multiple. Based on my estimate of $3 billion in EBIT, Amazon is trading at about 183 times earnings. Remember, this is what everybody complains about. They're not actually making any money on a price earnings basis. The stock looks ludicrously expensive. expensive. I agree, but remember, they're not trying to make money. And if you look at the price sales ratio of 3x, that's pretty cheap, given this is a company that could grow at 20 to 30% for the next couple years. That wraps up my review of Amazon's Q3 2017 financial results and knockout quarter for the company. 43.7 billion in revenue. Profits are still non-existent and very tiny, but remember, that's Amazon's model. It's all about growth, and the growth in their core business, even without Whole Foods, has accelerated to 29%. The market loves this, is sending the company to all-time highs. Let's see if they can keep this momentum going next quarter. I'll be there to recap it. That's Hyperchange. See you guys next time. Peace.